So hi everybody. Thanks for coming to my presentation about the regulation of crypto assets and DeFi in France and Europe. So my name is Victor Charpiat. I'm a French lawyer at a firm called Kramer Levin in Paris. I mostly specialize in crypto assets and fintech. But most of all, I'm a long-term fan of Bitcoin and crypto. I've been somehow in this community for a long time, and I even invested in the DAO in 2016 because I had met the French guy who was the spokesperson of the project, Stéphane Tual, and it was, I think, the very first DeFi project on Ethereum, and also the very first terrible failure. More recently, I've been focusing at the personal level on DeFi and also working with some clients about it. So I only have 20 minutes, so I will need to keep this short. The first part of my presentation on the regulation of crypto assets in France and Europe, I will try to go over this pretty quickly because there will be other talks during HCC, which will cover in more details this regulation. So I will try just to go very quickly over this and then speak in more length about the regulation of DeFi, which does not exist currently, but mostly what it could be and what it will be, and how I feel about it, and then we'll move to, I hope, some questions if we have the time. So first of all, we have a detailed crypto regulation in France and Europe. It was mostly created after the ICO bubble of 2018, and it's mostly motivated by the AML regulation. So basically there was a European directive that forced every country in Europe to create a framework requiring every crypto company to obtain a registration before providing services. And this is what happened in France, and we also regulated ICOs. And basically this regime works quite well. There are 19 registered crypto asset service providers in France right now, which is pretty good, and there are a lot of others in the process of obtaining their registration with the regulators. But still, it's not perfect. The main issue is that there is no European passport. So I don't know if you are familiar with this, but basically a passport in TradFi allows a company in Europe to provide the services to in all European countries with only one license in one European country. And there is no such thing for crypto assets companies in Europe. So basically, if you're a crypto assets company in Europe now, in theory, you would have to go in each country and obtain a registration, which can't be done in practice. So basically, this regulation covers the business models of 2018 and before, but it does not cover practically at all the business models that emerged after 2018 and that are the most familiar today. So of course security tokens, although we have in France and at the European level some clarity about that, but anyway there is practically no use of security tokens in France and Europe. Also stablecoins, they existed back then, but we still don't know how they truly qualify in French and European law. It would seem that they look like electronic money, but still the regime of electronic money is not applicable to stablecoins because it's too complicated, so it doesn't work. For NFTs, we are still wondering how they actually qualify and whether they actually qualify as crypto assets. And even I was talking about that with William, who's there yesterday, and basically the French regulator asked some of the French lawyers in the community to tell them whether they feel that NFTs are crypto assets or not, or from a legal perspective. So they're lost, just as lost as we are. And also something else that's quite important, it's absolutely not covered by the existing regulation. It's platform tokens such as BNB or FTT. So basically, this could qualify as securities because they use profits to repurchase tokens and burn them. So this is in some way a scheme to share profits with the holders of the token, but still it's absolutely not covered by the existing regulation. And of course, DeFi, which is completely overlooked by the existing regulation. So there is a draft European regulation, which is called MiCA. It was published, the first version was published last year. It will probably be adopted in its final version before the end of the year. And we can expect that it will be fully applicable by some next year or the year after that. So of course there is a lag, there is a time delay between now when the regulation is written and the time when it will become applicable, and who knows if there will not be a lot of other business models that will emerge by then. And basically the MiCA regulation, at least in its draft, still does not cover DeFi and probably would make a lot of DeFi projects quite complicated, mostly because this regulation would impose a very strict regime for stablecoins. And this regime, basically, they would force every crypto assets trading platform in Europe to only list stablecoins that are compliant with European law. So it would mean basically that the stablecoin like DAI, which is decentralized, could not be listed by a European platform because it would not have an identified issuer compliant with European law. Okay, so this was the part about the existing regulation. Now we will move to DeFi and the regulation of DeFi because, to be honest, it's more interesting. So I've been working a lot with French regulators in the last few years. So I think I'm able to put myself in their position and try to see how they feel when they look at DeFi. So first, what they see is the potential money laundering risk. And you have to know that regulators in France and basically everywhere feel that the money laundering is the biggest risk that can affect basically the public. So they see that we can interact with addresses very easily and without an intermediary. Even though, to be honest, the money laundering verifications could focus at the on-ramp and at the off-ramp because you need crypto assets to use DeFi. And you need to buy these crypto assets somewhere, generally using fiat currency. And then the other issue is, of course, the opacity, because in a lot of cases, there are not persons that are clearly responsible for a project, even though in many cases there are companies that have been incorporated to issue the governance tokens and in some way operate the DeFi protocols, because of course the developers consider that they are not responsible. The people that operate the front end consider that they are not responsible because users could interact with smart contracts by themselves without going through the front end. And of course, the core team, they have in practice a lot of power and control over how a DeFi protocol is headed, where it is headed. But they will say in any case that we have a governance token, so basically all the decisions that are made are not our decisions, but they're decisions made by a DAO, so we're not responsible for anything that happens. And then, from a regulator's perspective, it's harder to tolerate that some business models are not regulated. So I'm not talking about business models like money markets, like AAV, because basically lending and borrowing crypto assets should be outside of the regulation, at least in Europe, because crypto assets do not qualify as what we call funds, which is the legal definitions that is covered by the banking monopoly. But there are a few business models for which it's really hard to argue that they are not regulated under the existing law. And I mean the hedge fund, like, for example, Ribbon Finance. So I'm a big fan of Ribbon Finance. I even use the project. But when I see that, I can't help but feel that it will be regulated in some way, or it should be regulated in some way. So for those who don't know them, it's a covered call strategy that is used to generate yield on deposits of Ether or WBTC. And basically, it's written on the website. the vault manager will choose the strike price for the option and purchase or sell the option on behalf of the vault. And they say currently the role of the vault manager is played by the ribbon team. So you could not have more responsibility in any way. And there are some other models which are also very, I would say, not suspicious, but somehow. You take Yearn Finance, for example. They have a fee structure that is explicitly a 2 and 20 fee structure. The 2 and 20 fee structure, so with a 2% management fee and a 20% performance fee, is typical of TradFi hedge funds. It's been used since the 80s, and it's very weird that Yearn chose this exact same fee structure to represent their activity, because it makes them look like a hedge fund, which in some way they are. And other example, mutual funds or ETFs like the DeFi indexes, like the DPI, the DeFi Pulse Index. It's written precisely on the website. Like, we are a capitalization weighted index that tracks token performances. This looks like something that would be very regulated. And other example, of course, include derivatives like options, which are very regulated in the traditional finance. And also, and maybe this is what would be the worst from a regulator's perspective, derivatives, like crypto derivatives, but based on listed securities. Like synthetics used to do it at some point, but it seemed that they stopped. They paused this activity. But Mirror Protocol, which is not on Ethereum, but I think on Terra, this is their website. So they list a bunch of derivatives based on the listed securities. So you can trade these derivatives, and basically you have an exposure to the underlying security without having to go through any regulated intermediary. It's very interesting from a user's perspective, but from a regulator's perspective, this is something that is it's shaitan, as we say in French, which means it's like the devil. And so moving on to the regulation of DeFi, so I would say that the regulation in somehow will probably happen. So this now is more a personal prediction of what might happen in the future if things continue as they have been happening in the last few months. So I would say that if the current trend continues, regulation will happen. This is absolutely certain. And the current trend is, first, a lot of VC money going to projects, not only in tokens, but also in equity in the companies that are associated with the projects, like, of course, Uniswap or Compound. Also, a lot of very vocal and identified founders. There might be some in the room today, but there are a lot here at this convention this week. And we know who they are. We know who is behind Aave. We know who is behind the Curve. We know who is behind even Maker, which doesn't have a company. So if someday a regulator or even the police wants to question them and to impose some regulation or enforcement on them, they know where to find them. So this is something that's quite important. And also, of course, there are a lot of partnerships with TradFi and fintechs. And fintech, and a good example is recently the Compound Treasury that was proposed, or basically Compound will partner through a different company with fintech to offer 4% yield to the users of the fintech, or even Aave Pro, of course, which will create a pool dedicated to institutionals with whitelisting at the gate. And then the current trend is also that a lot of DeFi projects consider that they are decentralized because they're governed by a DAO, but when you look more closely, we feel like the actual governance is very questionable. The fact that it's actually decentralized. A good example recently was the DeFi Education Fund of Uniswap, which was funded basically against the opinion of most of the community, but only because some VCs holding a lot of tokens voted in favor of the proposal. And so it's questionable whether they're actually decentralized. And I know that this guy, Chris Blake, is controversial. He's a bit of a conspiracy theorist, but he makes good points in his open letters to DeFi protocols like this one to Polygon a few months ago. Basically, he checks the code and he sees that there are multi-sigs that control, in some cases, most of the protocol. And basically, he asks them what will happen if a few among the 8 holders of the multi-sig are arrested or forced by a government or a regulator to act in a certain way to maybe provide transparency on the transactions. And also, something that's quite important, regulators now have many tools to identify responsible people who are behind, who would be behind the DeFi protocol, even if this person would prefer to remain anonymous. So there was the FATF in its last draft guidelines. So they basically recommend governments to use blockchain analytics tools like Chainalysis, to use web scraping, to use information from the public, which is basically a way to tell people to tip the regulator, maybe against payment, to dox the identity of an anonymous person. So it's quite interesting. So I would say that there are 2 options for the future of DeFi. The first option, and the most likely, is a regulated DeFi, where companies will obtain licenses, like Aave did in the UK with an electronic money license last year. They will create companies and raise money from VCs, both in equity and tokens. They will probably start using only approved stablecoins, which means stablecoins with fiat backing and issued by central entities instead of decentralized stablecoins issued by protocols. And probably at some point they will start deploying KYC verifications, at least at the front end. So maybe during a time you will have a difference between using the front end with KYC and interacting directly with the smart contracts without KYC. But to do that, you need to be much more sophisticated as a user. And maybe at some point this would be the worst scenario, but it will probably happen, some blacklisting at the smart contract level, or even some whitelisting at the smart contract level, like Aave Pro. So the second option would be, I would like to quote Gandalf, so go back to the shadow from whence you came. This would be the second option. So I would call that back to the cypherpunk roots, because it is where it all started. More than 10 years ago, it's where it started, and maybe it is where it should come back now. So I would say that every DeFi project faces a dilemma. The dilemma is, do we want more money, or do we want more freedom? Do we want personal recognition and fame, or do we want, or do we accept not to be recognized for our talents by the public, or only being recognized for our talents, but under a pseudonym? So I would say that there is an example to follow, and this example is of course Satoshi, because he managed first to remain anonymous during all these years, despite having used emails and created websites. So most of you would say, oh, if I use emails and create a website, at some point I will be doxxed because I can't hide my identity for so long. He managed to remain anonymous. And he also chose to remain anonymous, despite being very wealthy and having the opportunity to become very famous, because a lot of people consider that he would have obtained a Nobel Prize in economics if he would have disclosed his identity. It makes sense because he brought so much to the economic community. But on the other hand, if a DeFi project today would choose anonymity or pseudonymity, there would be a lot of drawbacks. First, it's harder to gain trust from the public, and harder to raise funds, of course. You need funds to hire developers, but still, is that really a problem? examples of projects that are doing well without having either a company or their founders that are known to the public under their own name. And for example, Alchemix, it's a pretty good example. And you also have a lot of pseudonymous founders or like influential core teams members in DeFi, like Banteg from Yearn, Scoopy Troopers from Alchemix, etc. And there are also some developments in some kind of what we could call unincorporating venture capital, such as Eagle Capital. So it's a question for you in this room today. Would you trust a cat? Would you trust a couch? Would you trust a blueberry? Maybe. Why not? Because you know them, you read them on Twitter, you know that they're experienced, you know that they know very well their topic, that they are able to produce high quality code. So why not after all? And another drawback, it's much harder to manage the real life aspect of a business when you don't have a corporation and when you want to remain anonymous, because you need to yeah, I think I'm out of time. So I'm going to go very quickly over the last ones. So basically, it's hard to handle the real life aspect of a business when you don't have a corporation, or at least an identity, like signing contracts, for example. And of course, there is an increased risk of scams. And then I would say, well, anyway. A few ideas to limit the risk for pseudonymous DeFi projects is my last slide, if anyone is controlling that. Not legal advice, of course. First, I would say a very good idea would be to separate the deployment of the code from the front ends, and maybe also having multiple front ends. And this is something that was done recently by Liquidity, and I think it's really interesting. They deployed the code, well, they have a company, but it's different. And basically they said, anyone can run a front end for our code and then get a small kickback. So they are diluting their responsibility, and they are sharing that responsibility between themselves and the front ends. This is something that's quite interesting. On the two other advices would be to first use pseudonyms and create communities online around pseudonyms. And I think this is something that already works in DeFi today. You just have to look at Twitter and see how many pseudonymous accounts are very well known and very well followed by basically everybody, and they are trusted, and this is the most important thing. And then a last point I would say, I think DeFi projects need to think really seriously about governance tokens. Whether they are really useful or really that useful, because they increase a lot the regulatory risk, because they might be at some point requalified as securities. It might happen in many jurisdictions, we still don't know. And they also increase the legal risk because there is a liability. If you sell as a company governance tokens to investors, basically you are liable as a seller in accordance with the traditional law of it's contract law. Basically, it's contract law. So if you don't sell governance tokens, you don't have that risk. And I would say that some projects works very well or worked very well without governance tokens, like Uniswap. They just need to pay their LPs. They don't need to pay the protocol. Unless there is a very good reason to do so. So I went a bit over my 20 minutes, so I will take a few questions now if anybody is interested. And if you want to continue the conversation, I'm on Twitter.
What do you think about using tokens to like make laws, basically? Like, just as you had the lawyering for a service and you make research on the topic, you would like, yeah, get money to make some political candidates in some countries more popular. Like, yeah.
You mean politically?
So the question is like, would you use tokens to make politicians politicians?
No, I don't think I would.
Okay, in Europe, like in France, would you run for office and then like find yourself with tokens to like gain legitimacy?
Not using tokens, I think, because I think it should remain separated. What happens on the internet, it works on the internet, and because it's not based on trust, it's based on mass. And in the real world, we have different interactions, and the trust is created differently with people that you know, and you know them under their own name. So I would not add tokens to that. I think it works not that well, but it works. And adding tokens to that would probably not solve the issues. There are issues that would remain whether or not you have tokens, I would say.
Thank you.
I don't know if this is on topic, but can you comment on the recent Binance crackdown, and how do you see that game between exchanges and regulators going on?
Yeah, it's a very interesting question. Obviously, the strategy of Binance during all these years have been to avoid regulation by basically saying that we are not incorporated anywhere. But at some point, that strategy fails because on the long term, there will be basically every jurisdiction in the world, except maybe a few tax havens, will have their own regulation for crypto services. So they can't hide forever. They will need at some point to get incorporated very officially in one jurisdiction, and then obtain licenses, which they already started to do in the US and also in the UK. But it's from a regulator's perspective, it looks weird. This kind of organization, from a regulator's perspective, looks very weird because it's very different from what they are used to with TradFi companies.
Hi. What's your position on DAOs creating legal entities within Europe, or even multiple legal entities? Do you think that ruins the whole purpose, or is that even possible with like on-chain governance?
Technically, it's not possible, at least in France and from what I know elsewhere in Europe. You can create a company, of course, with shareholders, but to do that, you need shareholders, so you need equity. And equity is, in Europe, always paid in fiat currency. So to be honest, DAOs remain like unclear legal. Their legal status is still unclear in Europe. So I know that in Wyoming they have passed a law allowing DAOs to have a legal status as an entity. But to be honest, I would rather have DAOs that are not legal entities, that are not incorporated either as companies or associations, and then just find ways for them to enter into contracts and to maybe pay their developers or pay their partners without having to create a company. Even though I know that it increases the legal risk because every person that is involved in the DAO might be at some point considered as having like how we say in English, it's unlimited liability. Whereas on the other hand, when you have a company, the liability is limited to the amount that you have put as equity.
I'm going to ask a bit of a philosophical question. So, you know that people that do blockchain, they don't like government, they don't like regulations. Many of them probably don't like European Union. So this is like this battle, definitely. This blockchain people and the government. It's clear that it's a conflict. So what's going to happen like 20 years from now? Is it like the government is going to win, or the blockchain, the crypto is going to win? How the world is going to look like, 100 years from now? It's like going to be all crypto, no government, or all government, no crypto, or somewhere in the middle?
To be honest, I'm a bit pessimistic because a lot of us we do what is easy, and what is easy is not to use tools on the internet to make ourselves untraceable or anonymous, and basically we are fine with using emails under our own names, using our phone number to register on websites, and not all of us, I think, use VPNs. I don't even use a VPN myself. So if we all do collectively that kind of effort to remain anonymous on the internet, it could work. But if we don't, at some point, it will be too hard or too easy for governments to enforce regulation upon us.
So we have understood that there is two options to be regulated or to become to get back from the DeFi come from. Honestly, I understand that there is at the end only one option, because getting back to the anonymity, it's something that is for most of the project is it's economical death. On the other hand, be regulated right now, it's a regulatory death. So what is your timeline, I mean, for the current DeFi project that is out of the regulatory, I mean, requirement right now? What is your expected timeline for the project to be regulated or to land somewhere?
Yeah, that's a good point. To be honest, the regulators, at least in France, don't have the teams or the staff in sufficient number to enforce that kind of regulation upon a lot of companies. So they are limited in their abilities to actually enforce the regulation. So I would say that there are at least maybe 2 years before the MiCA regulation becomes applicable, and before the regulators start to hire more people to enforce their rules and first clarify their rules about DeFi. And basically, projects that are doing stuff today which are not that regulated, like maybe not hedge funds, but maybe like stuff like decentralized platforms or money markets, it's likely that they will not have to, they will continue to operate with some kind of tolerance from the regulators, at least in France. And at some point, probably they will have to obtain a status. Maybe a status that does not exist yet, but that will be created in a few years, some kind of light DASP registration, I don't know, with maybe adapt KYC requirements. Because for all these projects, the KYC is the deal breaker. You cannot have KYC verifications on DeFi projects without losing 95% of your potential users on TVL. So it cannot work right now. So I would say there is a tolerance. Okay, so I think that's it. Thanks for coming.